Jamie Whitcroft from HSBC Innovation Banking for a conversation that I think will be very insightful. Thank you.
Thank you, Michelle. Michelle's taken over from Derek. She's the new Derek. And isn't she a hell of a lot better? No, I love Derek. Can we have a round of applause for Michelle as our new head of program? That request for the pay rise will come in tomorrow, Michelle, okay? Jamie, now, Jamie's going to introduce himself. Before he does, I want you to remember, when he gives you the big numbers about venture capital, about HSBC innovation, about passion capital where he used to be, about his startup, Uncapped, he's got an 11-month child that has stopped sleeping. Okay, so, when he gives you all that background, just remember that as well. Jamie, give us some big numbers about yourself.
Thank you very much. Yeah, apologies if I feel like I've slept. I haven't actually had much sleep last night. So, but anyway, my name is Jamie Whitcroft. I'm part of the leadership team here at HSBC Innovation Banking, particularly our early stage business. We bank around 1,000 pre-seed to late Series A companies. Before I joined the business about a year ago, I was part of the founding team of a fintech lender called Uncapped. That business raised about 35 million of equity and 200 million of debt within the 2.5 years that I was there, and was the second fastest growing fintech in Europe in 2021. Before I joined that business, I was part of the team at Passion Capital, which is a pan-European seed fund with about 200 million under management. They back the likes of Monzo, Go Cardless, Marshmallow, Lendable, so all fintech unicorns. And then before that, I was a corporate lawyer, also not getting much sleep, for 6 years at two city firms. So I've kind of been through a bit of a journey on various different things and sat on various different sides of the table.
And life was so easy, you thought, you know what, I'll have a kid.
Exactly. That's all fun.
Yeah. We'll come to managing sort of personal life and growth at the same time, but in terms of growth, look, HSBC innovation, everybody's interested in top tips on growing. What are the kinds of services you guys offer to help these companies which are headquartered in the UK to grow and scale up? I know you bank a heck of a lot of venture capital funds, for instance. How do you use all those relationships to benefit everybody in the room?
Yeah, sure, it's a great question. So I think if you take a step back and think about where we are in the market, we are solely dedicated to providing an offering to tech and life sciences companies. So it's all we do and it's all we know. So also, if you think about the people that we bring into the business, a lot of those are ex-founders, ex-VCs like myself, who actually really understand the journey and have empathy with what's happening. And I think a key thing about our offering, even for very early stage companies, is every company will have a dedicated relationship manager who's a sector specialist for that company. So we have the person dedicated to SaaS, to life sciences, and so I think that really stands us out in the market.
I should say earlier on we had a lunchtime session with one of your colleagues, and I confess that at my bank, which isn't HSBC, I've only spoken
It's
to
not?
Not yet, but I'm being persuaded. And I said to her, I've met my bank manager once in 10 years. She said, well, they didn't even take me for lunch, so you guys are even doing lunch. I mean, proper relationship management, even with scale-up companies. Now, before it becomes a sales pitch for HSBC, I want you to still sell yourself in terms of, okay, what are the tips in terms of just scaling up? Obviously, you bring a lot of knowledge to the bank. What are the tips from saying, let's start off with Passion Capital first. What is it that you saw about companies that grew? And try and give me the uncommon wisdom, the stuff people might not have heard of before. What were the things you saw in companies which grew the most that we should be implementing?
Gosh, it's a tough question. I think what I'll do is take a slightly different direction. If I think about probably some tips for founders when you approach VC funds and how they think about the investments they make. So with Passion, we looked very closely for three things. So we're looking for a top quality team, we're looking for some form of traction, so evidence that the market is receptive to the product.
Just on that point, give me some examples of what would really obviously grow profit in the obvious for sure, but were there other things if companies were a bit earlier in terms of traction?
Yeah, so just to provide a bit of context, so Passion invests sort of with that pre-seed and seed stage, so by its very nature there isn't really a lot of data or traction there, so a lot of the investing is really about feel. But what really stood out for us with some companies was maybe they hacked together their first 1,000 sign-ups for their product if they're a consumer, or if they were B2B, they had some POCs in place and they'd use their initiative to find, the buyer at an enterprise or in a bank that was buying their software. And suddenly you go, okay, wow, this team, although they're very early stage, they've made a number of significant strides very early in the journey, which you can extrapolate and you think, well, okay, if this team have got that far this early, we think they're potentially backable.
Right, and once you'd backed them, what kinds of things impressed you the most about what they asked for, which accelerated that growth? Because you obviously didn't just give them money, and similarly with HSBC Innovation, you're not just going to open doors and facilitate that funding side. What is it that you want to see them do to accelerate that maybe people don't realise is important?
Yeah, I mean, the irony of venture is actually your best companies don't need your help as a VC because they figured it out and they're nailing it. Actually, you spend a large amount of your time working with the companies that maybe haven't quite figured it out. But what was quite idiosyncratic was actually a lot of times, and I actually saw this play out over the 5 years I was at Passion, a lot of the times you thought the companies were the winners very early, maybe their growth plateaued, and actually the companies that had maybe not found that product market fit really early or taken a bit longer to find the traction, actually may have made something work, and suddenly you see this huge inflection point further down the line, and actually, wow, they become one of your A-rank businesses and potential fund returners. So it can play out in different ways.
So what was the catalyst when you saw some of those have that kind of hockey stick growth? What changed that made that happen?
Yeah, I mean, it's very business dependent. I think if I talk about a consumer business that's a car insurance business called Marshmallow, one of their early hooks was they were offering car insurance to expats. And expats have traditionally been priced out of the market because there hasn't been available data on the expat when they're in the UK, so they just get lumped in a high-risk bucket and they get charged extortionate amounts by insurers. But what Marshmallow did was they went to the marketplaces, so moneysupermarket.com and the other players, and said, listen, we're offering this product to expats and we're using data from the home countries, so we're offering you something slightly unique as a marketplace, an offering you haven't got. And that got them in as a wedge, and then they just expanded out and started offering car insurance to a much bigger market, not just the expat market. So it sort of hacked the marketplace, which was really smart. And once you get on those platforms, your distribution's just solved.
So on that point, again, the hockey stick of scaling, which is what everybody wants, is the holy grail. When and how do you know to pivot or to persist? What's the clue?
Yeah, gosh, if I knew that. I think, I can talk about our experience at Uncapped. I think where we had early success, and just for context, so I joined the business, there were two main founders, and I joined as number 3, so pre-product, pre-revenue, just the 3 of us, and we sort of scaled that business, it's about 100 people within 2 years. And I sort of, as you do in that point of business, wore every hat under the sun. So, did sales, ops, legal, growth, whatever you name. But our partnerships actually drove the large bulk of our early growth. So we basically, I did something like 6 Zoom calls a day, every day during COVID for about 6 months to build out our partner network. And that started driving organic growth, which was fantastic because it was very cost effective. Apart from my salary, our acquisition cost was exceptionally low because it was free referrals from venture investors or accountants, lawyers. And then that got us really up the curve and allowed us to go out to VCs, raise our 20 million Series A in the first year from Lakestar because we'd shown this amazing growth. But what we did experience was plateauing in those channels. So what you need to think about is, okay, this channel might be working now, but I need to plan and be aware that actually that might saturate at some point, so I need to make sure I've got other things and other options around growth.
Yeah. Okay, now you see a lot of businesses obviously now at HSBC, far more than you were seeing previously, because now you're looking right across the gamut. What's catching your eye in terms of both strategies for growth, but also maybe sectors? We'll have people here who might be able to think about pivoting and not just focus on the areas they're in. What's getting you excited when you get in the office and you think, you know what, these strategies work really well, and these companies do well, and these sectors are working really well? What's exciting?
Yeah, I mean, something I'm probably like a lot of people spend a lot of time thinking about is AI and generative AI and how that can be utilised and used by companies to accelerate whatever part of their business. Now, just what might be useful is to kind of give an investor's perspective on this, because I kind of, having been in the VC and been an angel investor, I think a lot about, okay, well, what makes a good investment? And I think if you're thinking about adopting generative AI in your business and going out to market to raise money, leveraging that story, I think you have to think very carefully about how you position that to the investor, because the way I see it, if these models are interchangeable and becoming commoditized, the underlying base models, that is a very hard story to sell to investor, because I would turn around and say, well, where's your defensibility? Because everyone's using the same data. It's very hard for you to carve out a niche there. So I think that's just one thing. The story, or I've spoken to the investors about this. What they're telling me is, they want to see some unique data that maybe is giving that business an advantage versus another business leveraging generative AI that gives them an edge or gives them an angle to beat out competitors. So it's just something to think about.
I suspect every single, we've got 5 minutes being worked, so we've only got 3 hours left. I suspect every single business here can be using AI. Can I just have a show of hands who hasn't in some way incorporated it yet and doesn't plan to in the next 6 months? Well, you got a PhD from Cambridge at the age of 12, so you are AI. You can drop it in models. Quick questions from the audience in the next 3 hours that we've got left. Anyone? For Jamie. Like, where's the money in this building? Come on, you're in a bank. You want to know where the politics are. Hot circuits late, security's gone off. Questions? Otherwise, I'm going to continue asking more.
I don't know if that's a good thing or a bad thing, there's no questions.
They are gobsmacked and intimidated. That's what it is. Johnny.
Having been a VC, what are some limitations of VCs that founders might not realise?
Yeah, so I think the first thing, VCs are incredibly busy people and are fallible, effectively. They, whilst having lots of money, suffer the same biases as everyone else, right? And they'll be being pulled in millions of directions. So I think, don't necessarily take a lack of responsiveness as them not being interested, and definitely don't take a no as them saying no forever. I think what VCs want to do is see some data points over a period of time and track that progress, and then they might invest later on. So I think be very persistent and just be aware that they're flat out, probably getting pulled in a million directions. So it's not personal if they're saying no or not responding. That is something that can be turned very quickly.
Oh, yes, they did fine.
If you've got VC money on your roadmap, but it's not for a few years, how early should you start going out there to meet a few people?
Yeah, so I would advise building a relationship as early as possible. Now, it's a delicate balance because you've got a business to build, right? And there's, a million VCs out there.